Hello ladies and gentlemen, my name is Kamal Mallick. My project is an entrepreneurial project and it focuses on setting up a trading business in Jebel Ali Free Zone to market specifically Indian products in Brazil and Nigeria. The mission of the aim is to set up a trading company and to streamline specifically Indian products using Jebel Ali in Dubai as a channel on the emerging Brazilian and Nigerian markets. The aim is to revive my company AM Traders, which was based in India but has been dormant for 1 year, and to move the headquarters to Jebel Ali with 100% ownership. Every business is a very risky proposition. So before I ventured into this, it was very important for me to do some groundwork, and that is something which we've done with quite a structured methodology. The factors that we've used are desktop research. We've done trade fairs in Dubai and India. We've done interviews, and last but not the least, we've done quantitative and quantitative research. The quantitative research gave us a good insight into the official facts and figures of the specific markets we're looking at, while the qualitative aspect gave us attributes of the type of people and consumers we were looking to target. To begin with, let me give you a little background of AM Traders, which was established in Mumbai in 2003. AM Traders was started by me and my mother in 2003 to specifically tailor to the UK and US markets. We basically had looked at about two products. One was semi-precious stones and jewelry from India, and the second product was kaftans. Kaftans are basically a crossover product which is used in India as well as internationally. However, having said that, when we are looking at the new business model, these are some of the attributes that we are looking at. We are looking at the new cost model. We are looking at a higher quality of products. We are looking at new markets which are primarily Nigeria and Brazil, and we are planning to relocate to Jebel Ali. The reason being, in the last couple of years, with the world economy coming down, the UK and the US as the market has been saturated quite considerably, and we found that overall our customers were shying away from doing business with us because there was not enough money in the market. Let me give you a little brief description of our core products. Okay, Exhibit 1 is basically an example of a kurta. Exhibit 2 is an example of a semi-precious necklace. And this is a typical product that was very, very popular in the West, which is like an Indian Shiva statue. Our portfolio is divided into three areas. That's what we're looking at right now. 60% of our portfolio is going to be kaftans, 15% is going to be semi-precious jewelry, and 25% is going to be Indian handicrafts. Just to give you a snapshot in terms of the differences between the old and new business model, let's look at a few factors. Our old headquarters was in Mumbai, India. The new proposed headquarters is going to be in Jebel Ali Free Zone, and we're going to talk subsequently about the advantages in Jebel Ali. The second aspect is the target market. Initially, we were just doing at the Western market, but now we're looking at emerging markets, and that's why we boiled down to Nigeria and Brazil, which are really, really upcoming emerging markets. Our core products are going to be constant. We were always doing kaftans, jewelry, and handicrafts, which we are going to stick with because that's what our specialty lies in. Having said that, our product quality was more average and medium. This is where we've looked at a change, but we're going to look at more above average and higher quality products. In a lot of ways, it was very generic in nature, and that's where a lot of competition got us. So we're looking at more special mix, which is a mix of modern and traditional. Our cost model was more average quality, high volume, low cost model, but now we're going to look at more high quality, medium cost model. And last but not the least, just to give you a little insight into the number of people we had 2 full-time employees, which was me and my mother, working as directors in Mumbai, and we had a part-time employee in Mumbai. But now in Jebel Ali, because my mother is retired, I'm looking at being the only employee, and we're going to have a person in India who's going to basically, coordinate with our suppliers back home. Target market. What are we looking in the larger scheme of things of doing? I mean, what we're looking to do, we're based in India. However, we're looking at Jebel Ali, which is again based in the Persian Gulf as a platform, and basically target Nigeria and Brazil with a view that in the future we're probably going to look at opening up offices in these two different areas to basically work the specific markets. It was important before we undertake this expensive proposition to look at the market in terms of analysis. And here, something which I learned over a period of time in the MBA really came handy. We looked at something called the pestle analysis, which gives you a good insight into some of the factors that people look at when entering a country, namely political, economic, social, technological, environmental, legal. Let me give you a little snapshot of these countries. Brazil. Brazil is the largest economy in Latin America, but more importantly, we did notice there are a lot of similarities to India. It's complex, highly culturally diversified country. It has a huge middle class, and last but not least, faith and religion are in the center of Brazilian stage. So that will really help us in terms of a lot of products that we can tailor make in the market. On the other hand, Nigeria is the largest economy in West Africa. It has a huge considerable domestic market. English is the official language. A lot of Indian products have been very popular there over a period of time. We've got a large Indian diaspora there. Bollywood is again an example of how it's very popular among Nigerian masses. Dubai, where we are planning to base ourselves in Jebel Ali, which is a free zone, is a major trading hub for Nigerian traders. So that's really going to assist us in terms of moving into the marketplace. Now obviously the question arises, which is the synopsis of my entrepreneurial project, is why is Jebel Ali? I mean, when I talk to people about Jebel Ali, a lot of people don't even know where it exists. Just to give you a little snapshot, Jebel Ali is based in the United Arab Emirates. It's 20 kilometers from Dubai. Having said that, it is a free zone. The uniqueness of Jebel Ali is the fact that there are no customs. There is 0% import and re-export duties. It's used as a platform by the likes of all the Fortune 500 companies for their logistic purposes in that part of the region. In terms of more statistics, it's about 57 kilometers long. More than 7,000 companies are based there. It has access to 2 airports. So from a logistic point of view, we've got direct flights to Brazil. We've got direct next day service to Nigeria. Also, we have access to 2 international airports which service these markets. So these are one of the primary reasons why I'm in Jebel Ali. And of course, last but not the least, is the taxation purposes. Is 0% income tax. So that really helps a businessman. From a logistic point of view, just to give you a little bit of a backdrop, this is what we are hoping to do in the larger scheme of things. We are looking at our head office that's going to be based in Jebel Ali, which is going to basically be facilitating our buyers in Brazil as well as Nigeria. We're going to have a small satellite office in Mumbai, India, which is basically going to liaison with the suppliers. But most importantly, what we're looking to do, which is very unique in the marketplace from a market strategy point of view, is we are planning to have a toll-free service in India, which is a 1-800 service, which can be accessed from all over the world, which is very unprecedented, where basically a client in Brazil can just pick up the phone and call up this 1-800 number, which is going to be serviced. We're going to outsource it to a company in Bangalore in India, and basically they will be our representatives and they'll give information about that. Coupled with that, we're also going to have an interactive website in Portuguese as well as the Nigerian language, which is again unprecedented. So this will give our buyers the facility and the ease to do business in India. For small orders, we're going to use PayPal. For larger orders, we're going to facilitate through our Jebel Ali bank account. Obviously, let's talk about financials, which are very important. I've tried to keep it very simple. The startup capital of the company is about $100,000 US, and this is going to be taken from personal funds which I have saved over a period of time. Okay. We have looked at the total fixed cost first year, which is about $90,480. Let me give you a breakdown of the first fixed year cost. Salaries are going to be 33%, which includes my salary and the gentleman in India. Okay. The office, lease and insurance is going to cost us 19%. The licenses and deposit is going to be 3%. Office equipment, travel, miscellaneous is going to be 11%. And the first time one cost is going to be 25%. Coupled with the fact our major marketing foray, which is the toll-free website in India, is going to be about 9% of our total cost on a yearly basis. Again, getting more specific into profitability and the breakdown, let's look at typically how we are looking to recoup our money. We've divided our 3 products called kaftans, jewelry and handicraft. Basically, we're looking at a markup of about 35% on our kaftan, which is very nominal, 50% on our jewelry, and about 25% on our handicrafts, which will give us a profit margin of 25.88% on the kaftans, 33.3% on jewelry, and 19.97% on the handicrafts. This is just an example in terms of, obviously from a business point of view, we need to look from a break-even point of view. So what we've done is, again, from a very sort of easy sort of point of view, we've broken it down into our break-even point, and we've divided it into how many sort of units we have to sell on a monthly basis to break even. We are looking at a 12-month period to break even. Basically, we've got to sell 2,140 kaftans on a monthly basis, 535 pieces of semi-precious stone jewelry on a monthly basis, and 892 handicraft pieces on a monthly basis, which again, with our research, is very plausible in our price range. Basically, our price range is from about $3 to $10, which is again a very affordable price. Again, this analysis obviously has come over a period of time, and we have used Porter's 5 forces of competitive positioning, which again gave us a good insight in terms of the medium and long-term viability of the business. Just to give you a little snapshot, we've looked at a few areas. One is the threat of no entry. Although the threat of no entry is low, it's quite expensive to come into the marketplace, so which kind of helps us. Only traders that have large economies of scale can come into the market. From a buyer's power perspective, the buying power is quite high because we have limited wholesalers and shopkeepers, and most of the products have been homogeneous. Again, from a supplier point of view, it's quite neutral in nature from that perspective, and the threat of substitution is quite medium. Furthermore, adding to that, we've looked at our SWOT analysis because we had to look inward and look at our scheme of things, that where do we stand today and where we are going. Our strengths are basically quality products with value for money. We're looking at only unique and exclusive products, and that's going to be our USP points, that we are not going to do generic products. Number 3 is the ability to ship at quick notice from Jebel Ali and Mumbai. We're going to be retaining stock of about $20,000 in Jebel Ali. So in the event if a client has urgency for an order, we can directly ship from Jebel Ali, or we can move it to Dubai and give a customer there. And obviously, more importantly, is a fact in terms of our market strategy. How are we going to get the product out there to the customer? And that's where we come into being is the fact with our 800 toll-free number in India and our website, which is going to be interactive and in Portuguese for the Brazilian market, and in the West and in Nigerian for the Nigerian market. Is going to be in that specific language. Weakness, yes. I mean, we are looked at areas where obviously we are new to the Nigerian market, which is a substantial weakness. We have no credit because people don't really know anything about us. We are not able to buy at competitive prices simply because we haven't bought enough, so that might be initially a weakness. Coupled with the fact that they have been more established, big Indian players that have been there in the market for a long time, so that's obviously a weakness. From a threat point of view, yes, a return of investment, because we haven't really envisaged everything, could take a little longer than prediction of 1 year. But obviously, we've got to look at opportunities. I mean, it's a great opportunity for us to establish and optimize a distribution network, because obviously over a period of time we are looking at entering Latin America as a whole, same thing with West Africa. So we are testing the waters with Brazil and Nigeria simply so that in the next 5 years, which is our goal, to establish the offices there. Last but not least are our conclusions. Basically, we see very bright prospects for trade of Indian products to Brazil and Nigeria. There's been a lot of interest spurned, talking to different traders, doing research on the market, talking to people from the different chamber of commerces. Our products have to have uniqueness, otherwise they are not going to really, in the larger scheme of things, compete, because we can't compete on price, we have to compete on the uniqueness of our product. Jebel Ali will give us the platform to build a business on economies of scale, because we are taking that step and spending a little bit more. We can simply on the basis that we're looking at a progression over a period of time. We need to invest more in marketing. Obviously, it's only 9% right now, but we've got to understand we are a startup and we have incubation costs. We can't put a lot of money on marketing. The long-term objective, obviously, of AM Traders Free Zone is to establish branch offices in Brazil and Nigeria, which is specifically make our foray into the Latin American market. In the larger scheme of things, Jebel Ali is going to be a head office, even when we open offices later, because it has a big geographic reach and it can do things for us. And we have challenges in the short term to establish ourselves, and that's going to be the key, where basically we are trying to figure out, what works, and we have to do a lot of sort of plus and minuses initially. So that is our view of the market. We are positive moving ahead. Thank you.